Probably the most important chart that I'm watching right now outside of the moves in the financials is the US dollar. And what I've brought up here yesterday, we talked a little bit about the long-term charts, and this is the intermediate set of charts, which is the 3-month, 1-month, and 2-week chart of the US dollar. And the US dollar now has made another new 10-day high today, hitting a high of 80.35. And usually, we've talked about this a lot over the last couple of years, whatever the dollar does, the financial markets usually do the opposite. So we're in an interesting pattern right now where the dollar opened the new year very down here at 79.50, but has rallied sharply, almost a full dollar on the US dollar. Say that a few times. And yet the S&P and the financials, etc., are all moving higher also. I'm looking at this longer-term chart to really give me some guidance, and we talked about this at the end of the year. We were following this quite a bit. As we came down to the 79, 80, 50 level, we said as long as we hold the 79, which happened to be the 3-month low just a couple weeks back from 3 months ago, you can't see it on this chart. As long as we held that, and we again did hold that 79 level, there's a good chance that the dollar would go higher. The dollar has continued to go higher, and this was, again, well before the fiscal cliff noise, and it kind of preceded the whole fiscal cliff talks in going higher, and you see that again in the 1 month and the 2-week charts. So, nice little double bottom that you see formed right here in the last month, and that was just, again, a week before Christmas. It formed very nicely. We're well above value now on the hourly, on the 30-minute chart, and on the 240-minute or 3-hour chart. So, again, something is amiss here in that the dollar and the financial should be moving in opposite directions. So I keep talking about this on the Twitter feed, but something's amiss, something is wrong right now. I don't know which one it is. Is it the dollar or is it the S&P 500 and all the other indices as we trade? Because they all shouldn't be trading in the same direction. That being said, we are trading in the same direction. Just want to point out this divergence that's happening right now in the marketplace, because this is something that you really need to pay attention to. So, again, if we were to bring up the ES, just to show you this real quick, we're seeing kind of the same patterns showing up across the board, and very bullish charts also on the ES. But the ES has a lot more room to pull in to, say, to this 14-13 level. So maybe we'll see a pullback before we see a further extension to new highs on the S&P, or maybe we'll continue to see another move to test the high of last year at 1469 and then move higher. So it's all up in the air right now, but the dollar is key to me, and that's why I'm watching it on these interim periods. Also, just to bring up real quick, the 10-year rates have gotten hammered while the dollar has fallen. So this is a proper relationship that's intact. So, but this trend has been in play for some time as the dollar has gone up. Interest rates and the bonds have continued to get hit, and interest rates have continued to go up. So, inverse relationship there. So, again, the dollar's key. Looking ahead, and something to keep your eye on. Something is amiss here. Either the dollar is wrong or the U.S. indices are wrong here, and we'll know sooner than later, but time has to pass for us to see this play out.